Fools, welcome to another Motley Fool conversation. I'm Andy Cross, joined around the table here with Tom Gardner, our CEO and co-founder of the Motley Fool, Matt Frankel, a Motley Fool contributor, and we're super excited to have Mark Jones here, the CFO, Chief Financial Officer of Goosehead Holdings. Mark, welcome to the Motley Fool, and thank you for joining us.
Thanks for having me.
This is my favorite way to start the interview. So far, you've been a great stock for us. Will that continue?
I hope so. I'm probably not allowed to comment on that.
Exactly. That's the wrong first question, but it's foolish. Back to Andy.
It is very foolish because we're investors. We started many years ago. Tom and David started as investors, studying great companies and trying to find the best companies we can invest in for individual investors around the world. Mark, and we're excited to talk a little bit more about Goosehead here with Matt and with Tom and with many of our members. So thank you for joining us. Matt, why don't you take it away and start us off with a couple questions?
Yeah, I'll start off with an easy one. You're different than other insurance companies. You don't write insurance policies yourselves. You're an agency. Can you just kind of briefly describe how your business works? I know you're a franchise model, so kind of give us some color about that.
Sure. Yeah. So we are, as you mentioned, a personal lines insurance agency. So that's a little bit different than anything else you would see in the space. Most other public companies that are agencies are mainly focused on commercial lines and don't really have a big personal lines operation or aren't really interested in growing a personal lines operation. We're very much so focused on personal lines. I think it's an area of the market that has been really underserved from a technology investment, from a people investment standpoint. We distribute through really two different types of agents. So we started franchising our front office business, the sales office of side of this, in 2012. Today, we've got a little over around 1,100 franchises out in the field, encompassing about 2,200 producers out there on the franchise side. And we got about 417 corporate agents that are W-2 agents. And all of their jobs are to go make relationships with loan officers or realtors in part of the home closing transaction, get leads sent to them, and then they can sell the home insurance associated with that transaction and cross-sell the other lines of business. It allows for clients at the point of need and urgency to interact with a knowledgeable agent in kind of a tech-first organization that allows them to act with a lot of speed and urgency. But we've also, over time, built out a really strong carrier portfolio. So we distribute product through about 280 different insurance underwriters. That's been growing over the last few years as there's been some constriction in the market of underwriters. But that allows us to serve really every market, everything down from your $150,000 home all the way up to high net worth and from coast to coast. So it's a pretty differentiated model.
And Mark, it's almost all on the. I mean, the big part of it is tied to home insurance. There's not life. It's really on the personal lines, and really, I mean, home is the big need and the big driver of your business, right?
That's right. We lead with the homeowner's transaction. So if you're thinking about when somebody needs to buy a home insurance policy, it's typically when they're closing on a home. So there's not an incumbent policy you need to try and beat. They have to make a decision. That's an easy point for us to get involved in the transaction and make it really seamless for the client, but also make it really seamless for the loan officer. So if you think about why do they want to work with Goosehead, it's because we can provide speed and choice like nobody else in the market to make sure that they don't lose any home closing deals because of insurance. And then we try to round out the client and cross-sell the other lines of business. So auto, umbrella, flood, a little bit of life, but homeowners is really our bread and butter.
Yeah, so you just mentioned homeowners is really your bread and butter. In your latest investor deck, you specifically call out home insurance several times as being a big growth opportunity. Do you see home insurance as your biggest long-tailed growth opportunity in Goosehead?
I think so, because that's the way we connect with the best type of client. So if you think about somebody that's buying a renter's policy, they probably don't have a super big asset base, and the premium is not super big on a renter's policy. So our commission might be $5 on a renter's policy. A homeowner's client probably has a car. They may have more than one car. They might need a jewelry policy. They likely need a flood policy, which means they also probably need an umbrella policy. So there's a lot more opportunity to capture the other lines of business if you lead with the homeowners, whereas it's not true the inverse. If you're just getting leads off of an auto dealership, not necessarily all of those clients are homeowners. They may be renters. They may be living with their parents and somebody else has the insurance. So leading with the home allows us to access a differentiated client that helps our carrier partners as well get a better underwriting loss ratio performance.
And Mark, is the franchise side and the in-house side, as I'll call it, working with the loan officers. When you think about balancing between the growth profile and the resources that you're allocating across the company, how are the growth profiles in both those businesses looking today? How are they operating?
Yeah, so on the franchise side of the business, that's where probably the biggest growth opportunity is over the near to medium term. We've got about 2,200 agents, like I said. Today, we expect to continue to expand that throughout 2025 and into the future. We're less than 1% of the personal lines market share in the United States. So the total addressable market is really, really big. There's a lot of opportunity for us to continue to grow. And we're pretty heavily dense in Texas, more so on the corporate side than we are on the franchise side. But there's a lot of geographies where we are really underrepresented from an agent force perspective that produces a lot of opportunity for us.
And is it heavily on the franchise side to go and open new franchises, scout new franchises, find the right partners, which is a big part of what you're trying to do? From the regulatory perspective, is it differ vastly from state to state? How does that all work? 'Cause I know you work with national carriers as well as lots of different kinds of carriers.
Yeah, it is. So in personal lines insurance is regulated at the state level. So it's 50 different regulators, which creates a lot of complexity for anybody trying to scale on a national basis. That's why we feel like we've got a pretty defensible position in the marketplace because there's not really a good comparison of somebody that is targeting personal lines only across the entire US because it's really complicated. You have to deal with 50 different DOIs and build a carrier portfolio that works in Florida, but also works in California and also works in New York. And that might be a lot of different types of carriers. It's not all going to be Progressive Traveler Safeco. You're going to need some Cajun underwriters in Louisiana, some of those. And if you don't have the product team that can go develop those relationships and the agent force that can provide high quality clients to the carriers, you're not going to be able to build those relationships.
How has Goosehead had so much success with the franchise model? Like, what is the process for becoming a Goosehead franchisee? And what you mentioned, you have, I think it was 1,100 franchisees, specifically. Like, how have you been so successful with that business model more so than other insurers?
So when we set out franchising, what we decided was the back office of this company scales really, really well. The service function, the finance and accounting team, the quality control team that's reviewing all the policies, all of that scales super well. And really the limiting growth factor was our ability to go recruit new college age kids and put them into one of our corporate offices, but then importantly have the management bandwidth to absorb all of them. We kind of call that term absorptive capacity. Franchising the operation and having it all work on one centralized back office, a fully integrated model, allows us to grow the front side of the business really, really rapidly. So we've had very rapid growth for the last 12 years since we started franchising in 2012. So I guess it's 13 years now. And it's a really compelling value proposition. So if you are an agent in a captive model, somebody that can only sell one product, the choice platform naturally makes a lot of sense to you because if a client calls you and says, I need to reduce my premium, it's getting too expensive, the only option you have is to cut coverage. Try and search for some other discounts out there, but those are pretty hard to find. If you have a choice platform, you say, okay, well, let me shop you with this other carrier and see if there's somebody that's willing to take the risk at a lower price. And consumers more and more today actually demand choice. If you look at some of the industry data, captives have been losing market share to both independents and directs for the last decade. I think that pace is only going to continue. And what's interesting is independent agents haven't lost any share to the direct side of the business, which you would think maybe that would start to happen with a younger generation. Don't necessarily always want to talk to an agent, but because we target specifically the homeowner's transaction as our lead go-to-market strategy, typically people don't want to try and underwrite that themselves. That's their largest asset. You want to talk to a licensed professional who understands the product nuance and not necessarily try and buy it direct. There's also not really a lot of direct home insurance product out there. But from a franchise value proposition standpoint, you get access to our carrier network. We help onboard you to make sure you've got all the training and technology tools that, from our perspective, are better than anything else that's out there in the industry. We've built what we call our referral partner search tool, which that allows you to, via a database that we've compiled, see every single home closing transaction in the country, which means you know who's the loan officer and who's the realtor on both sides of the transaction. And you can be really specific in your targeting or in your marketing efforts to make sure you're going after the highest value potential partners first. So that's a really differentiated piece of technology. And then from a comparative rater standpoint, once you've got a client on the hook, being able to quote them across multiple different carriers in a seamless fashion, we built our own proprietary comparative rater that allows agents to quote much more quickly than what else is in the market. And then you layer on top of that, the next iteration is a platform we call quote to issue. And that allows you to, all within the Goosehead ecosystem, bind the policy without having to bridge to the carrier site. Now, that's not live for every carrier in every state, but we've made material progress on that in the last couple of years. That again just speeds up the time that an agent can close on a policy and then allows them to reinvest that time back into marketing efforts or serving their existing clients. And then from a franchise perspective, one of the biggest challenges in the industry is as your book grows, if you're not with Goosehead, you naturally hit a growth asymptote because your book gets so big, you spend all your time servicing and none of your time selling. So one of the biggest differentiators for us is we've separated the sales and service function, which means after you've initially closed the policy, yeah, you want to maintain that relationship with the client. But if they need to say add a card to their policy, it goes to the service team to handle that at speed. And we've got over 700 licensed US based agents that make sure your book of business stays in force for as long as possible. Because I think what's obvious is in this industry, it's all the money is in the renewals, right? The first year of the policy, yeah, you're making some money, but you want to keep that client on your book for as long as possible. And our service team allows us to do that, I think, better than pretty much anybody in the industry.
If I'm correct, the company was founded in 2003. I'd love to hear what you see, what you think as a leadership team and as a board are the major strategic decisions you've made over these 20 years, and what is one that you're facing now as you look ahead?
Sure. So the first most major strategic decision was separating sales and service. So it hasn't always been that way. When we started the business, the thinking in the industry was every time you talk to a client, it's an opportunity to build a relationship, to cross all of the lines of business, to deepen that. But what we found over time was our best sales agents did the worst job servicing because it was just kind of fundamentally a different personality, somebody that's hungry for the next sale. Whereas the service agent needs to have kind of unlimited patience and be able to solve whatever problem that the client has. So separating the sales and service functions was the first big epiphany of the business. I think that's been a really successful one. The next biggest piece was in 2012, the franchising. So being able to grow the front office a lot more quickly and rapidly expand across the United States. And then in 2018, we launched a product called the Digital Agent, which is on our Goosehead website. You can go and basically fill out a form and get a quote back that is, in many instances, a quote that is very close to the actual bindable number. That will change as you go through from rate call 1 to rate call 3, but it is very close to what the actuals will be. That doesn't actually exist anywhere else in the industry, to our knowledge. There's plenty of websites that tell you they're comparison shopping, but really what they're doing is stealing your or selling your data. I shouldn't say stealing, but selling your data to all the other insurance carriers. And so you're going to get a call within 5 minutes from 5 different agents. And then every year you're going to get another call because they know your policy is coming up for renewal. Our digital agent platform doesn't sell you information ever. It just gets it to a Goosehead agent who can act on that at speed. Those are probably the three biggest ones that we've done over the last 20 years. In the future, as we get more into the partnership channel, that's an area where we haven't really expanded the business dramatically, absent the last couple of years. So in 2023, we launched a partnership with Vivint Smart Homes. Now, they do alarm installations, and naturally, that's really adjacent to the insurance product because typically you can get a discount on your homeowner's insurance if you have an alarm. And so they'll send us leads for alarm installs. Or for home insurance, we send them leads for alarm installs. It's a natural symbiotic relationship, but we're looking to expand that channel pretty rapidly. And one of the interesting developments in the industry is homeowners insurance typically has not been that big of a topic of conversation for mortgage companies. It's just been something that has to get done, not usually a roadblock. What we're seeing now is mortgage servicers are experiencing slight upticks in default rates on their book because many times the insurance and taxes are the same amount as the principal and interest on the mortgage in your escrow. So it's become a really important topic of discussion. And so what we're doing to try and solve that problem for mortgage servicers is there's a couple options that they have. They can embed a Goosehead franchise into their existing business. And so if you think about a servicer that's got 70,000 clients on their book, okay, they know all the information about the home, they know all the information about the client, and they know the existing insurance information. So that allows them to be super targeted on when they can actually save somebody money. and be proactive about it. That's an avenue that we're attacking today. And then obviously AI is the topic of conversation, I think, in every business. And so we're looking at ways that we can revolutionize the service force, make sure we're optimized from a client experience perspective, and also a cost to serve perspective. And then how can we point those tools at sales agents to make sure we're matching clients with carrier underwriting appetite as best as possible so we can drive profitability for the carrier partners? Because obviously none of this works if we don't write profitable business for the underwriters. And so that's a big objective, and I think one we can use AI to do.
One of the things that we love about founder run companies or companies that are public with founders very involved all the way through is that rarely I find were they acquisitive. They generally decided to grow their business organically. Maybe that was because they like to have their equity stake continue. They like to have more. They were more interested in organic growth, maybe internal promotions, et cetera. But when you look at this category and how fragmented it is, I do wonder, do you think there's an acquisitive approach for Goosehead going forward, or do you feel that it's been the right decision to be organic in your orientation for growth?
I think it's certainly been the right decision so far to be organic in our orientation. I mean, if you look at our growth rates and our profitability, most things that would be available for us to buy would be dilutive to one or both of those things. On a go-forward basis, that's generally how we still feel about it. Most M&A ends up being a shiny object, a distraction for the management team, and I think the stat is something like 50% of those deals don't end up really working out. I look at a lot of things. A lot of stuff comes across my desk of potential acquisition targets. So far, there hasn't been anything that I thought was a compelling either valuation or adjacency for the business. It's not a never will happen, but it would really have to be a sweet spot for that to happen.
So I do have a follow-up on Tom's acquisition versus organic question, but before I get to that, I want to ask kind of a more fun question that's been on my mind since I first heard of the business. I said when I first wrote about Goosehead, I think 3 or 4 years ago, that it has the least boring name of any insurance company I've ever heard of. I mean, like think like Geico, government employees insurance company, boring. But Goosehead, where did that name come from? Where did it start?
Yeah, so I come from a really big family. My parents are the founders. I think that may be obvious. I have the same name as the founder. We have a big family. I'm the youngest of 6. So my sister, the oldest grandchild in the family's name is Lucy. My dad is big on nicknames. Lucy, Goosey, Goosehead. And so she's 17 now. So when the name changed to Goosehead, I think that was in 2011, 2012. She was pretty young. She thinks that the company is all hers. It's fine. We'll let her think that. It's great for a 17-year-old.
Are you the what? How many family members are involved in the business?
I'm the only one still involved in the business. Everybody at one point or another has worked here.
So I'll ask my less fun follow-up now. This is a direct quote from one of your investor decks. It says, your goal is to be the, quote, largest personal lines distributor in the U.S. in our founder's lifetime. Now, there are some direct insurers that have, much larger market shares, like, 10 to 20x where you guys are. And if the preferred path is not to be acquisitive, is to grow organically, what's the path to get there? And in your founder's lifetime, as you put it?
Yeah, the path to get there is rapidly expand your headcount and continue to drive productivity as aggressively as possible. Our investor deck would tell you that our agents are kind of multiples of industry best practice. That doesn't mean that they're where we really want them to be, though. I think the ceiling on productivity is much higher than where we are today. But also the TAM, if you think about TAM of producers, the TAM of producers is really, really massive. There's thousands and thousands of insurance agents in the country. So there's a long runway for us to continue to grow. And we got to do it really, really rapidly. There's 2 variables to that goal, right? It's how long does the founder live and how fast do we grow? I'm trying to extend the founder's life for as long as possible. Obviously, he's my dad. I'm also trying to push the growth rate for as fast as possible in a profitably responsible way.
Hopefully they go hand in hand. You can grow very rapidly and your father
Yeah.
can live for many, many years.
Yeah.
Many
Ideally.
years. Yeah. Mark, I'm curious on your marketing strategy. How do you think about, is it primarily really working with the lenders and the firms? How do you grow? Do you have an intent to really grow the brand of Goosehead to more consumers? What are your thoughts there about trying to expand, as you talk about the TAM with the agents, but just maybe in just growing awareness.
Yeah, so we intentionally do not have a very big advertising budget because I don't think it's super effective. The customer acquisition cost of buying those eyeballs is super, super high. And if you just look at an example of somebody like Progressive, they spend a lot of money on advertising. I think they do it very well, but they also distribute through independent agents because there's a difference in the customer acquisition cost. It's really expensive to buy the eyeballs versus distributing through an independent agent. For us, it doesn't really matter if everybody in the world knows who Goosehead is. What matters is that the mortgage officer that's closing on the home in Austin, Texas, knows who Goosehead is. And the way you build those relationships is on a one-to-one basis because those mortgage officers want to work with somebody in their community who understands the product nuance that's happening in their local region. It's very different to operate in Florida than it is in Central Texas, than it is in California. And so you need to be on the ground in those markets. So we go out, it's also very inexpensive, but we go out and we meet those people physically, explain our value proposition. And then when they send a lead over and we can execute it at speed and deliver on our value prop, there's not really a need to go elsewhere. And the RESPA regulations would prevent you from really sharing economics because you're not really allowed to. So there's not really this quid pro quo there. It's we just want to help each other and our businesses grow. I think it's a really inexpensive way to attack marketing. Now, we're still going to do scrappy marketing type activities, your search engine optimization, try to be present on social media, make sure our marketing campaigns are as, pretty and informative as possible. But we're not going to have a Super Bowl ad. You're not going to see a Goosehead Stadium. We're not going to be on a golf tournament.
Mark, I want to talk a little bit about the market the market you're facing right now. You talked a little bit about this recently. I think it was really really interesting about the complexity of the insurance market, especially as inflation has kind of really ebbed and flowed. And I think that speaks to maybe some of the strength. You talk about the last couple years as inflation has been high, then it fell, and all in between, working with the agents, helping them be able to work with their end clients and recruit more end clients and drive more business because of the market complexity that insurance has become.
Yeah, premium inflation specifically over the last several years has been really, really high. I mean, pricing has taken off really since kind of the middle of 2022 pretty aggressively, more than what we've seen in our company's history. That has led to a couple of things. One, when premium is running really hot, that typically means that carriers are either pulling out of an industry or an area or trying to reduce growth as much as possible. That's a challenge if you don't have a really robust product offering. And one specific example I would give you is California. So there was plenty of news in California and before these wildfires about, State Farm pulling out, USAA pulling out, a bunch of other underwriters completely stopping new business in California. Whereas we pretty aggressively onboarded product onto our platform in California, and it's not always the admitted product. It's excess and surplus lines, which from a regulation perspective is a little bit different, but we've been intentional about trying to provide our agents with the most access possible. What that's led to in California is really, really strong same store sales growth for multiple years in a row because our agents are the ones that are best armed in that market in a pretty constrained product market. And you can contrast that to somewhere like Texas, where it's been a pretty constricted product market for now about a year and a half, as carriers try to deal with these hailstorms in Texas, severe convective storms, that there's not really reinsurance capacity for. That's a big challenge. And so, what we've been trying to do is make sure our existing clients know when you get a big price increase, you need to call a Goosehead first, and we can shop the market and make sure that you're covered appropriately. So you don't go to a different agent who's going to undercut your coverage and say, look, I saved you some money, but Aaron, I've actually covered appropriately. We want to cover you appropriately. And if we're not the best option for you, I want you to go find the best option. And then you'll come back when the market shakes out itself because it is a supply and demand issue. And it's been a tough slog for the last couple of years for clients and for agents alike. And I think we've combated that storm pretty aggressively.
Yeah.
Yeah. So, I don't want to put words in the other two people's mouths on the call, but I have to imagine that one of the things that attracted Tom and Andy to Goosehead is the economics of the business. It's a very high margin business. I want to say in your last quarter, it was something like a 40% adjusted EBITDA margin, you know,
Mhm.
very attractive economics. Can you kind of walk us through, because it's important for investors to understand how the business makes money. If you're not a regular an insurance company like we all kind of know, is it commissions or there's some sort of franchise fees? Can you kind of walk us through that?
Yeah. So we typically break down our revenue into three buckets. core revenue, which is the revenue we get from selling insurance policies. So you sell a policy that's $1,000 of premium at a 15% commission rate, you get $150 in commission. We just do that a lot of times over and over and over again. On the corporate side of the business, we recognize 100% of that as revenue. On the franchise side of the business, just our royalty is revenue. So we would get 20% of the first term of the policy. And then each time it renews, we get 50% of that. That's what really drives the entire business, is the core revenue. Commissions coming off of insurance policies that we sell. So we place a policy with Progressive, we pay Progressive the premium, Progressive plays us a commission, we pay the agents. Then we have cost recovery revenue. That's really franchise fees that new franchisees pay. And that's really just a mechanism to cover our costs to find, onboard, license, and get them active. It's not necessarily a way we're trying to make money. And then there's ancillary revenues, which is contingent commissions. That's basically bonuses that an underwriter pays agents for delivering really profitable business for them. That's really the three buckets of revenue. And then on the expense side, headcount is our biggest expense. And the majority of that is on the service team to maintain the existing book of business, because the renewal book is significantly more profitable than the new business book. A policy in term 8 is a lot more profitable than a policy in term 1, and it typically just requires less work. And then on the technology side, we're placing a lot of resources into our tech function to optimize tools for agents, but importantly, to help automate and reduce complexity in the service side of the business. That has allowed us, I think, to grow our margin profile really nicely over the last several years, and we expect to continue that in the future.
Mark, maybe a quick one. You mentioned the E&S market. Is that going to be a larger part of your business, or will it be still predominantly in the admitted market?
Our business has picked up on the E&S side over the last couple of years, really more on the coast. So coast in California and the Gulf Coast, but we have a pretty heavy presence there, specifically Houston and the Gulf Coast of Florida. I don't expect that's going to be a long-term thing. It's still a very small percentage of our total new business, but it has grown over the last couple of years. I would expect as the admitted carriers get more pricing through their book of business, they come back in and less of it goes to E&S.
And you had mentioned just about the investments in technology, and we talked about the more agents you can have that are more productive and profitable, the better for everybody. It is this interesting balance as you think of as technology starts to come into helping so many companies be more efficient. Is it a case where it's one or the other, where you don't have to bring on as many agents because they're more efficient through AI, or is it a case where it's really going to be an accelerator as you add on more franchisees, more agents to be able to utilize your technology stack to be able to be more productive?
Yeah, I think it's both. I think our existing agents can get a lot more productive utilizing more technology enhancements, some AI tools that we're working on today. And I also think it unlocks the client pool that we just don't really have access to today. The online shopper who may be the right profile of client that we want, but there's not a marketplace for them. I think if we can provide the right tools in the market, we can capture a significant amount of market share in a really rapid fashion. But we still very much so believe in the role of the independent agent in insurance distribution. I think the vast majority of clients, especially on the home side, want to talk to an agent and understand what they're getting into. And we are trying to build the technology that can be as simple as possible for clients to understand as they're clicking through and try and digest all the complex financial implications of a home insurance policy. But really, for the most part, I believe the independent agent still has a really big role in this industry.
Mark, we're going to try something here, and if it doesn't work, well, then we will not spend much time on it. I don't know if you're going to be able to see this on your monitor, but
I see it.
Okay, I'll first describe what it is. This is our Moneyball database. It's an AI-powered database that scores public companies. It's scored, actually, in this database, 3,400, but we've also scored over 2,500 microcap companies in a separate database, because getting all the data sourced for very, very small companies is hard and complex. So here we are. You're in the larger database with your market cap north. Well, what is Goosehead's market cap right now?
Depends on the day, about 4.5 billion.
Yeah, about 4.5. That's what I thought. So here we are in the Moneyball database. Now what I'm going to do is I'm going to type in Goosehead, and so we can look at some of these scores, and you can tell me if you think if you'd like to object to any of them. So I'll walk you through them. We have Goosehead, ticker symbol GSHD, insurance. Roundta is a financial formula, return on unlevered net tangible assets. It's actually purported to be a factor that Warren Buffett, he's certainly written about it in a shareholder letter years ago. Essentially, what sort of, operating cash flow do they draw to their physical asset base? And, general view that above 20 to 25% is a good target. Okay, so Goosehead is 54%. Our financial prompt, this is an AI-powered prompt. Each of these now is a combination of AI engineering and investing expertise internally, where we pair those two things together, grab all the data, systematically have built numerous prompts, collaboratively built those prompts, and ended up with scores. Okay, so here we go. The financial score for Goosehead is 83. The product score is 75. Leader score is 75. Tech score is 51. The GARP, growth at a reasonable price, some measurement evaluation, is a 75. AI is a 35. And your overall super score is a 70. Now, I do have to share this with you before you respond, if you'd like to any of these scores and object to any of them or enlighten us on any. That this is up against 2,400 different companies. So, NVIDIA is off the charts with its numbers, of course. So for a company of Goosehead size, these are very strong numbers, but I'm curious if any of them stand out to you, or you want to react to any of them. You don't have to if you don't want to.
But I don't know what's going into each one of those numbers, so pretty hard for me to react to all of them. But I would say I think we've got really consistent cash flow generation, really strong earnings growth, a massive TAM, and not a super strong competitive set. So I think we're in a really good position.
Thank you for that. Matt.
How can I follow up the Moneyball discussion? So you mentioned competition. The insurance business it's a very fragmented one. So that's a good thing for growth and taking market share, but it also, on the other hand, a fragmented market means you have a lot of competitors. That, it's the definition of it. Is there any other company out there that does what you do in a comparable, franchise business model, or are your main competitors, the captive agents and the, direct sellers?
I would say the main competitors in any given marketplace can vary. Typically, what you'll find is there's probably a smaller regional independent agency that is good in a specific market, but more broadly across the US, you're going to find us competing against the captives probably more than anybody else, just because they are everywhere. From an independent agent standpoint, I don't think there's anybody that has the tools that we have and the ability to deliver for agents and carriers as well as we have. And because we've been able to build up such scale with our carrier partners, it gets us differentiated access inside of their offices as opposed to what you would get as a small mom and pop insurance agency. So it's tough for me to point to a specific competitor that looks like us, national, personal lines focused, organic growing. I'd flip the question around on you. Do you know of anybody?
I like it.
I don't. Especially not a direct competitor. I don't know if you guys do, but no. So
it ends up being one of the most underrated factors in investing, in my opinion, is how, if you do have a very direct competitor, then it would be nice to know that there are no others. So your Visa and MasterCard, or your Cadence Design Systems and Synopsys. But in so many great investments, it does become hard to name a number two. They do show up in different ways as markets expand. And, there is a number two to Netflix out there, but it's just a great scenario, I think, when we find a company that's very well run financially with a large market opportunity and not a clear, direct competitor. Which is why
what's been helpful for us is we didn't start by looking at what do independent agencies do. We just said, what is the right thing to do? And let's start there. And not being PE or sponsor backed allowed us to take our time and I think do it the correct way. Having it basically entirely be funded out of one guy's bank account gave us some degrees of freedom that I don't think other people have had. But it's been a really good business model for us, and I'm very confident in the future runway.
Who was
nice
the
you have
person who funded it?
Mark Jones.
Okay, got it. Okay, good. I didn't know if there was a great uncle. That's great Uncle Joe was unbelievable. He was
you took the leap of faith or being a Bain partner for 16 years and said, well, I'm going to go start an insurance agency because the industry looks pretty broken and the opportunity set looks pretty massive.
Yeah, it also helps to have an asset light business model that drives a lot, and that definitely helps. And Mark, interesting on the special dividend you all announced and I think paid. I think paid, announced and paid more than $5 per share. I just want to talk a little bit about that. I know you got asked about this recently on the call, but just to enlighten us a little bit from your seat in the CFO and then Mark in the CEO chair and the board, and you're thinking about ways to allocate capital, decisions to make with your with your both your balance sheet, then also how to fund that, and just with the cash flow and for shareholders. Can you just walk us through that decision? Why decide to do a dividend versus big buybacks, or just to plow it back into a company that generates pretty healthy returns on capital?
Yeah. So I think we're in a pretty advantageous position because the company funds itself entirely. Uh, really strong operating cash flow. We don't really need the money to run the business. And we've said this a lot of times. You can't just throw money at this and make it run faster. I mean, maybe there's some areas in tech that in theory you could, but you got to figure those out first before you deploy the capital against it. So our philosophy has always been we want to try and maintain an efficient balance sheet. And so 2016 was the first time we did this. We did a levered dividend. We did it again in 2018. We did it again in 2020 and in 2021. It had just been a few years since we've done it. And I think we've been pretty consistent in our messaging that you should expect this type of thing out of Goosehead because we delever so quickly through earnings growth that affords us the optionality for shareholder return. And in 2024, we did do a pretty substantial share repurchase program. We bought $60 million of stock at a pretty attractive valuation. I would expect over the longer term, you see a mix of dividend and share repurchase, just as there's ebbs and flows in the market. But yeah, we want to maintain an efficient balance sheet, but we don't want to get over levered. So we're probably not going to ever be above 4 turns of EBITDA as a total debt number. And given our earnings growth rate, it just delevers really quickly. Yeah.
Matt?
Yeah. So you mentioned earlier that renewal commissions and royalties are a big part of how Goosehead makes its money. And the reason I'm bringing that back up is because one of the things that really stood out to me when I was doing some research on your company is the 84% client retention rate, which stood out to me as high. And one of the reasons that I think it's high is because most insurers don't mention their client retention rate. Is it how does that compare, like in the context of the industry? And what do you do to what's Goosehead's edge in keeping client retention as high as it is?
So I think part of our edge is having a licensed service force. Most places you've got to isolate the different tasks that an agent can do because that not everybody's licensed. Only some people can handle these types of questions. Only some people can handle these types of questions. We've tried to, as much as we can possible, arm everybody with the ability to handle as many things as possible. Naturally, that creates a little bit of complexity, but it's the ideal client experience. They don't need to be handed around. And to the 84 number, that's trended down over the last couple of years, just as insurance premiums have risen so aggressively. And you can imagine if you're a client and you get a 40% increase bill in the mail, you might just say, screw it, I'm leaving this company, I'm going to go somewhere else, not realizing that, oh, I can call in and get a reshop and maybe get a different rate with another carrier. So we've been combating, I think, those premium increases pretty well from a client retention standpoint. I expect that to go back up. Our high of all time was 89%, which I believe is at the top end of what the industry is capable of. I'd like to get us back to that level. That should generate significantly more excess economics, getting back to around 89%.
Okay, so I want to pivot back to when Tom had those Moneyball scores on the screen a few minutes ago. One stood out to me that personally I would have fought back against was the AI score. So you mentioned your technology platform, how it's a big advantage. Where does AI fit into that technology platform? And I see that you spend less on service payroll than your competitors. How much of that is due to incorporating AI, and where do you see kind of AI, growing within your business?
Yeah, I think there's a lot of areas where we can utilize AI to both reduce cost as well as accelerate growth. From a cost perspective, they're a little bit more obvious. How can we automate as many of the tasks that a service agent or a quality control person are doing as possible? So trying to use it almost like a horizontal layer across the entire business, really throughout our entire platform. You could do things like call transcripts and recording to automatically prompt trainings for a service agent to say, hey, this is how you should have handled that situation, as well as automatically learn what is the next best action to take. One of the pieces of our secret sauce with our carriers is that we have 40 million plus agent driven quotes. And the AI tools may be ubiquitous, but the data is not. So we've been able over our history to produce so many quotes that an agent would actually recommend to a client that we could in theory build a policy recommendation engine utilizing AI that produces agent driven behavior as opposed to client driven behavior. I think that's one of the reasons why you haven't necessarily seen a big tech company come into the industry and be able to disrupt distribution, because you have to be able to convince the underwriters that what you're doing is appropriate for the client and is not going to blow up their loss ratios. So because we have all of that data of agent driven behavior, I think that puts us in a leg up across the entire industry. And in theory, can help us maximize profitability for underwriters and minimize costs for clients.
And then just one more for me. So one of the things that I always tell people in investing is if you don't understand what can go wrong with the business, you haven't done enough research yet. So I want to, not to be a Debbie Downer here, but I'm going to ask a little bit about risk. So insurance is inherently a pretty recession resistant business, right? People still pay their homeowners insurance and car insurance, no matter really what's going on in the economy. What do you see as the biggest risk factors to not only just getting your business to the next level, but keeping things, going as they are now?
Yeah, so we're in a really interesting position in the insurance value chain. We're pretty insulated from most of the ebbs and flows, right? When premium rates are rising really aggressively, typically, product availability constricts, you see some slowdown in new business, and your client retention typically takes a little bit of a hit. But having said that, you also get a big raise on your entire book of business. If you get 15 to 20% price increases throughout the entire book, that can make a big difference in offsetting the headwinds from new business production or client retention. The inverse is also true. When pricing slows down, that typically means that carriers are really ready to grow in a lot of different markets. And then our agents are able to really rapidly onboard a lot of new clients. And then on the flip side of that, profitability must be high for carriers if they're not taking a bunch of rate, which means contingent commissions, which are 100% earnings, get a lot bigger in years where there's not super high price increases year over year. So we've very intentionally placed ourselves in the value chain where I think you're closest to the client and can maximize profit pools. It is a super regulated industry that is 50 different departments of insurance, which I think helps us. A, it's a competitive moat, but B, it also means one regulator isn't going to screw up the entire business. We've been able to navigate every industry from Texas to California to New York. They all have their own complexities and idiosyncrasies, but it also means we're used to change as well. So those legislatures turn over frequently, and we've got to adapt to all of those things. That is always going to be a risk, legislative risk. I think the biggest risk is just being able to onboard, train up, recruit new producers across the industry while we continue to invest in AI tools. That's probably the biggest area that keeps me up at night, is how do we get the right talent in the door in the right geographies and get them the right product access?
Mark, can't really talk about insurance without talking about all the devastation that we saw in California just from the recent fires, but just climate change in general, as we know, just impacting just different insurance markets. But what are you seeing from the California market? The opportunities there, the risks, just what are you hearing from different franchisees as they think about those kinds of situations?
Our franchisees on the ground in California, I think, have done a phenomenal job taking care of their clients. We have had people that had their homes burned down in California, and it's devastating. And I also think it highlights the importance of having an agent that understands the complexities of the product that they're writing. And from our perspective, because we have such a history in Florida and Texas, we're very used to natural disasters. We're used to hurricanes that cause moratoriums, that cause spikes in claims activity, but also taking care of clients when they're in their most need, right? They don't need us most of the time, but when they do, we need to be able to be there for them. So we have a long history of doing that, from Hurricane Harvey to all the hurricanes that hit Florida this year, and all the hurricanes really that have hit the entire Gulf Coast in our company's entire history. So we were prepared to handle what was going on in California. What you're seeing now is some moratoriums, carriers not necessarily writing in the southern half of California, but it is a big state. It's got a lot of population. It'll be interesting to see if there's any regulatory changes associated to that to try and allow underwriters to price risk a little bit differently, and make it a little bit more enticing for the admitted market, but remains to be seen. But absent that, we still have a very robust product offering in California, and our goal is always make sure the client is as taken care of as possible. It really makes me sad when I see the amount of economic losses compared to the amount of insured losses.
Sure.
That tells me we're not that other agents out there are not doing a good enough job explaining the nuance of the product.
And you talked about this, I think, on your recent call. It's about twice as high, right? Like just that gap between what's insured and what's not is extensive.
Yep.
Which is all opportunity for you all.
Yep.
Tom.
I first recommended Goosehead, I believe, in April of 2021, around $40 a share. Unfortunately, in October of last year, at about 110, I trimmed a little of the position because it had gotten to a larger amount of the overall portfolio than I wanted for our members. And of course, the stock has gone from 110 to 120. So we missed it, but we trimmed a little. So we're cheering for that to happen. No deep regrets there. But since we have the CFO, I'd love to hear, for someone looking out the next 5 to 10 years, and sort of a shortcut view, what do you think are the 2 or 3 things that someone could follow to get a good sense of whether the CFO thinks things are progressing very well for long-term shareholders?
Yeah, I would say continue to tune into our earnings calls and pay attention to our earnings releases. And some of the metrics to watch there would be how the producer count grows, how the policy in force growth rate trends. So, the second quarter of this year was 11% policy in force growth rate. The third quarter was 12%. The fourth quarter was 13%. So consistent accelerating growth rates. And then, as we've talked about, client retention is really one of the most important metrics for this organization. It's what drives more than 50% of the revenue and probably closer to 100% of the profitability. So we've been trying to signal to the market that you should expect kind of gradual improvement in that number over the next year as the product market kind of heals and pricing slows down over time. But I would say you track that number very closely and then just watch us continue to grow the top line and expand the bottom line.
Thank you. I'm curious, as CFO of a public company, how much does it matter to you who is in your institutional shareholder base? For a company of your size, what is the value of having, actively managed institutional shareholders versus the passive index funds that now own, 10% or more of every public company? Does that matter to you? Obviously, it probably takes some time, so it probably gives you some useful insights. But do you watch the flow and change of your institutional owners?
Yeah, we definitely do. And we understand what each one of our institutional owners is really looking for in the business. And we're not going to be able to meet the needs of everybody all the time, but that shareholder feedback is really important to us. And they can provide valuable insights. I mean, they're aligned with us. They want the business to grow and margins to expand. So to the extent they can be helpful in making introductions to potential partnerships or kicking around ideas on strategy, I certainly think that's helpful. But we have going for us as well as 35% of the stock is still owned by one guy. That's pretty helpful.
Now some wild card questions as we move to the close. How are you like your mother and how are you like your father?
That's a good question. Well, physically, I look more like my mother, right? She's got red hair and freckles, so similar facial disposition, but I'm about the same size as my dad, 6'4". Um,
Gosh. How about
I
just
probably
work style or professional approach?
Yeah, I would say I probably, since my dad transitioned to executive chairman of the CEO role, I've seen him take a couple of days off since then. But in the previous, 30 years of history, I'm not sure I saw him take a full day off. So that's kind of been my example for my entire life. That feeds into me as well. I don't really think about work-life balance. It's more like work-life integration. It's everything that I do is either really about my job or my family. I don't really have a ton of hobbies. I got 3 kids under the age of 4. They take up all my time, and when I'm not doing that, I'm here doing this. And that probably leans into more of my mom's spirit. So, 6 kids, doing a lot of it by herself as my dad was a Bain partner traveling around. So a lot of time with the kids.
Mm. Tell us a little bit about Mark Miller as the CEO, and what's even 1 or 2 things that might be a little bit different in his approach.
So Mark is excellent on operational excellence. So that's a different level of kind of scrutiny and managing to the details than what we've had, I think, in the CEO position before. My dad is a very big strategic thinker, broad strategy guy. Mark is also very strategic, but really on the details and operational excellence. That's been a really nice thing for the organization. Knows how to manage people and metrics very, very well.
Is there something that stands out at Goosehead that makes it truly unique as a corporate culture? something you do once a year, or some unique way that you think about compensation for your full-timers, or what is distinct for you about Goosehead as a company?
Oh, we're a really young workforce, and we get most of our talent right off college campuses, and that naturally leads to a real youthful energy across the organization. There's a lot of groups around. There's Bible studies, there's basketball groups. We try to really foster that kind of community type relationship. I think it's a very fun working environment. We got a chili cook off that we do every year. I'm not sure that that's super differentiated in the industry, but I really truly care about what our employees think and how they feel about the business, make sure they're feeling engaged with and that we're meeting their needs as well.
At our company, we call all of our employees fools. At your company, do you call all of your employees geese?
We don't. No, nobody's a goose. So there's only one goose. That's Lucy.
And this is my final one, and maybe Andy or Matt has one they'd like to close up with. But this is a selfish question that I have to ask. I'll name a single example where it was such a beautiful question. We often ask, what companies in your category do you admire, or companies in the world, because we're always looking for great investment ideas. And we're not asking you to suggest it as an investment, just what businesses are admirable to you. I remember talking to the executives at a company called Wix, and I asked them, what company do you admire? And they said, ServiceNow. It may look richly priced, but that business is just set up for major success. And I did another deep dive into ServiceNow and started recommending it after that. So I'm not putting any pressure on you about it, but what companies do you admire, either in the insurance industry or outside?
I'd say certainly inside the insurance industry, Progressive. I think they're the leader on thinking about how to go at this business, especially from an underwriter's perspective. They do a great job on their technology. They manage their P&L very, very well. We have a lot of respect for Progressive.
Mm, that's great. Matt, Andy, anything you'd like to ask in closing?
Just a very quick one, Mark. You had mentioned about talking to younger consumers about insurance. Just curious, what are some of the techniques that you talk to young people about insurance? We try to talk to young people about investing in finance and getting them started. But I'm just curious, have you found any secret sauce about trying to teach and instruct and show why insurance is so important for all consumers?
Well, it's a product that if you live somewhere or drive something, you have to buy. So there's not really any escaping it. So we've got to be able to explain it appropriately to all different kinds of audiences. And because our workforce does skew a little bit younger than the average, I think our average age of an agent is like 26 or 27. That allows us to communicate pretty well with those college age kids needing auto insurance or buying their first home. We don't really have that roadblock, and it's not the industry average 55-year-old trying to talk down to 26-year-old. It's really peer to peer.
Matt, anything in quick follow-ups?
Uh, Not really, other than to follow up on Andy's. Like it seems like educating the consumer is one of your biggest challenges, and you sound like you're embracing it. I mean, I know I used to be a college professor. The younger generations today really don't they like to do things online and don't like to talk to agents, like you said earlier. So how do you said that your agents are effective at communicating with the younger generations, but how do they, get them to not just apply for, because you mentioned Progressive by name. How do you get them to not apply for, homeowners insurance directly through Progressive and go to a Goosehead agent?
Yeah, so typically how that's happening is the loan officer is saying, "You don't have insurance? Great. Here's the person you should talk to. I trust them. They're going to give you a good service." And usually when you're buying a home, you're making a lot of really complex financial decisions. You want to talk to an expert that can help you. Now, if we were specifically just targeting auto or renters, which is just not really a super profitable line of business for us, it would be a different story. That's where I think you can go more of the direct to consumer type route and try and onboard clients without the cost of an agent. But where it's really important is in homeowners and understanding the complexities there. And that's what our agents are really focused on.
Mark Jones, the Chief Financial Officer of Goosehead Insurance. Mark, thanks so much for joining us here at the Motley Fool today.
Absolutely. Thanks for having me.